Let's review a file that we recently closed in Florida. It was 4 bedrooms, 2 baths, and let's go through the specs. This is what the property looks like, and let's go through the stats. So it was in Palm Beach, sold for $507,000. She put down 20% down payment. Her monthly liability was $3,159. That included credit cards, a current mortgage, student loans, any of these things that you see there. That's your monthly liability. Only one borrower on the file, and her credit score was 749. And her household income, $390,000 based on the bank statements deposits. Right, she went with a non-QM loan. Right, this is a 24 months of bank statements. I'll give you the details for that. And she was an attorney in Florida, and the property taxes close to $5,000, but your home insurance definitely on the higher end, $3,710 there. Okay, the loan option she went with was a bank statement loan. She did not want to provide her tax returns. She said, I only want to give you the bank statements and tell me how much I qualify based on that, right? We needed 720 credit score. She had higher than that, and we needed 20% down payment, and that's what she put down, right? And let's go to her CD here. So the loan amount was $405,000. The interest that she got on this non-QM loan was 6.490. Her monthly principal and interest was $2,561. But be careful, guys. Anytime you see prepayment penalty, and if you see the word yes here, that means if you were to refinance in the first 5 years, you may end up paying a PPP, your prepayment penalty, up to $10,529 in this case. So always review your CD and see how much your PPP will be if you're going with a non-QM loan, okay? There's no balloon payment. And after your principal and interest, she has escrow account that's going to be taking around $1,232 there. So collectively, her monthly payment is going to be $3,793, okay? And her closing cost was $24,000. And how do we get to this number? Your Section A, your origination charges, right? So if you're going to go with the non-QM loan, you're going to end up paying your broker's fees as well. But otherwise, if you're going to show your tax returns, then you should be only paying your underwriting fees and buying down the rate if you really want to, right? Your Section B, these are the services that she did not shop for. Your appraisal fees, your credit report, and all that, nearly $900 there. Okay, and these are the services that the borrower did shop for. Your Section C here, this is your title company. The buyer's attorney usually orders the title from their title company, and they charge around $3,000 there. Okay, Section E, this is going to be your government fees, right? These are your recording fees, your mortgage recording fees there in the county, and nearly $2,500 there. Prepaids, these are the Section F here. These are the services that you paid for before closing or at closing. This includes your home insurance and your prepaid interest. That was nearly $10,000 there, okay? They have wind insurance premium, which we don't see in New York, right? Wind insurance premium, $6,000 there, okay? So every state will have their own fees or extra fees that or requirements, and you can see that in Section E there or Section F there, okay? In G, this is your escrow account. This is your savings account, but the bank wants to start off with at least 3 months of your home insurance, 3 months of your property taxes, and 3 months of, in this case, wind insurance reserves. So you can see nearly $3,700 there, okay? When you add up all of this, you can see $24,000 closing cost. This was the final number on her loan estimate. We gave her $26,000. So if you're thinking about purchasing a house in Florida or any other states that we're licensed in, please get in touch.